Pakistan International Airlines stands as one of the oldest national carriers in Asia, and its financial story reflects decades of political pressure, mismanagement, and structural decay. The airline once operated as a profitable state symbol with modern fleets, strong regional routes, and international credibility. Over time, chronic losses expanded due to overstaffing, fuel debt, fleet grounding, and persistent government interference. These factors steadily eroded its balance sheet and market value. The total worth of PIA cannot be measured by profit alone. Its valuation is split between tangible assets and liabilities. Tangible assets include aircraft, real estate, engineering facilities, landing rights, and brand recognition. PIA owns prime real estate in major cities, including Karachi, Lahore, and Islamabad, along with international properties in New York, Paris, and London. These properties alone carry significant strategic value, independent of flight operations. The airline also holds bilateral air service rights, which are difficult to replace and remain attractive to private investors. On the other side, the airline carries massive liabilities. These include accumulated debt, unpaid fuel bills, pension obligations, and government-backed loans. Years of operational losses turned the airline technically insolvent, despite asset ownership. Any valuation of PIA must therefore subtract liabilities from gross assets, which drastically reduces net worth. This imbalance is the central reason privatization became unavoidable. The recent auction of PIA represents a structural reset rather than a simple sale. The government separated core aviation operations from legacy debt in order to make the airline attractive to bid. This move transferred a large portion of liabilities to the state while offering investors a cleaner operating entity. The auction process focused on majority stake acquisition, with operational control rather than full asset liquidation. Investor interest centered on turnaround potential, not current performance. PIA still commands strong domestic demand, international slots, and a recognizable brand. With fleet renewal, workforce rationalization, and independent management, the airline can return to operational viability. This is the logic driving the auction, rather than historical performance metrics. The auction outcome reflects both market reality and political limits. The final valuation fell below historic expectations, but aligned with operational risk and restructuring cost. This was not a loss of national value, but an acknowledgement of economic reality. The state chose sustainability over symbolism. PIA total worth today exists more in future potential than present numbers. The auction marks the end of state-protected inefficiency and the beginning of market-enforced discipline. Whether the airline recovers depends entirely on governance, execution, and strategic restraint.